Hey guys, welcome back to Smart Wallet and me. Today we're going to be doing a little analysis on Intel Corporation with the ticker symbol INTC. But before we get started, I just want to let you know that I have a goal in mind to have as many as 100 new subscribers to my channel before the year end. If you could help me to meet that goal and subscribe to my channel and tear that like button up, I would greatly appreciate it. If you can do that now, it won't cost you anything, but it will help me out very tremendously. Thanks a lot. So let's get into it. I'm going to do an analysis on Intel Corporation right here. I did a breakdown of their earnings per share. And what we do is we look at the earnings per share versus the PE ratio to come up with the fair value looking at their prices. And the projected price for INTC is for January 2021 for the high end is 60.89, which is 17.3% higher than where we are currently trading at $50.37. And the way I got this number is by taking their earnings per share estimate from Yahoo, and you can see here their high estimate is 539, and they have a growth rate for their earnings an approximate 15% surprise growth rate. So for September 2019, they actually earned $1.42, whereas their estimate was $1.24. There was a 14.5% surprise growth rate, and so forth and so on. When you look at 12/30/2019, there was a 21.6% surprise growth rate and 13.3% for the first quarter and 10.8% for June 2020. So I'm going to take a surprise growth rate and be very conservative of 10%. So if we do this calculation correctly and get the earnings per share of $5.39, multiply that by the earnings per share growth surprise rate of 10%, our new high earnings per share would be $5.93. And so we plug it into our spreadsheet here. And with the P ratio of forward trailing of 10.27, we're getting a high estimate of this stock to be $60.89, which is a 17.3% increase from where we are currently trading at. And on the low end, we have $3.80 for the earnings per share, right from right here, $3.80. And if you do the calculation with that in mind, with a 10.27 PE ratio, the stock would be trading at $42.93. So there could be more downturn on this stock in the future. So we don't know yet. I'll get into that in a little bit. So if we look at the average of the earnings per share, my average comfortably would be around $4.60. with a 10% surprise growth rate, with a new earnings per share of $5.05. And I used their current or their trailing 12 months PE ratio of 1162, coming up with a $58.73 for their fair value of their share currently. So you could see that there's a 14.2% increase from their current price where we are right now. Now, we also need to take into consideration that this stock is doing very well when it comes to their revenue and their income. You can see from 2016, they went from 59.4 billion all the way up to 72 billion in 2019, and with a net income of 21 billion. And there was a little dip from 2018. Their net income was 21.1 billion. And then 21 billion in 2019. And I think this year they might even have a little bit more of an issue because of the problems with their chip that kind of caused their stock price to drop. So if you look at this chart right here, right around July 23 of this year, their stock went from $61 all the way down to $47. So when a stock goes down, guys, on news, this could be an opportunity for you to buy in, because if depending on what the news is, but if the news is negative on a company, but yet people overreact on that bad news and they start selling off on their shares, this could really be a good buying opportunity because Intel has been around for a very long time. They produce a lot of chips in the industry. And this could be a very good opportunity because their stock just dropped and it's been trading pretty low from 47.73 to currently $50.37. And if you look at the current momentum of the stock price here, the money flow is around 55, and when it hit, it went to oversold to around 22, right around there. And then the momentum was very low as well, just like when it was when the pandemic hit. The MACD also went low, and right now we're in the -1 range. And the relative strength, the RSI, is also around 51. So, and we're trading way below the 50-day and 200-day moving averages, even with the pandemic drop. So, yes, it shows that this is short-term bearish, mid-term bearish, long-term bearish. But the reason why it's bearish is because this stock has really showed that there's some competitiveness with NVIDIA's deal with ARM, and it could be a challenge to Intel and AMD. And also things were shook up with the Intel management after the 7 nanometer technology didn't come through. There was a delay, and in fact the 7 nanometer technology chip is set to come out in late 2022 to early 2023. So as soon as that came out, that news came out around July 22, 23, that stock just plunged on that news. However, when people overreact, investors overreact, it could be a good buying opportunity to pick up this stock, given that the earnings per share that I just calculated right now shows that the stock value is undervalued, and there could be a good amount of opportunity to make money on this company. Now, if you believe that this company still has room for it to grow, and you believe that Intel will be around and continue to produce, more chips, then yeah, you should think about possibly investing in this company, because I think that they will turn around. They already made some changes in their management to execute this so that they can get this chip out. And yeah, there's competitors with AMD and NVIDIA, as I just showed you right now over here. The $40 billion merger agreement adds needed components to NVIDIA, but will face regulatory difficulty as well as potential backlash from ARM customers who compete with NVIDIA. So it's not going to be an easy road for NVIDIA to be able to take over this market over Intel and AMD. But we'll see how this goes. I'm really taking a look at this company and see what it's going to do. But whenever you hear negative news like that, it's really a good opportunity to check it out and see if there's any room for growth, and also to make some money on this, given that this company has done so well in the past and they're showing that they're improving and trying to make improvements in their chip making process. I think that there's good potential for this company to grow. So guys, let me know what you guys think about this analysis. Please leave your comments down below in the comment section. I would love to hear what you guys have to say. And please subscribe to my channel and destroy that like button. And I'll see you guys in the next video. Thanks for watching.